All right, what is going on, Discord and YouTube family? And welcome back to another edition of Market Review with me, T. Hobbs. Today is July 31st, 2025, year of our Lord, and we will be reviewing the S&P 500. I'll briefly review some of the other instruments, but I did a pre-market plan on specifically the S&P 500. So I'll go through the other instruments, but I'm going to be focusing on the plan for the S&P 500, right? So as usual, we start from the top down and work our way into the trading day. And forgive me because my cursor is a little bit delayed and I have no idea why. It was working just fine until I hit record on this stream and everything. All right, there we go. All right, so let's drop down to the monthly time frame and work our way down to the 4 hour and then to our actual trading thesis over here. So if we go down to the 4 hour, take everything off our chart. I mean, the monthly, we take everything off of our chart. And like we said previously, the market is still bullish, right? We're still making higher highs and higher lows, except we're in the month of August now, right? And if you watch the top down analysis video, we talked about around August, September timeframe, they start to do like what's called tax harvest. So even though we were coming into the month very, very bullish, I knew that the week was going to end with the new month. So that being said, I was like, hey, we're still bullish, right? But I want to see what we do going into August. What type of sentiment are we going to end? So Thursday is really important. We look at the weekly time frame. We can see that this is a week that's about to come to an end, but it's also a month that's about to come to an end. But nothing has changed. Thus far, we made a new high, right? And we have yet to break below the previous week's low at 63.20.50. Therefore, the move or the stronger move is going to be to the upside, depending on what part of the spectrum you're on, via premium and or discount. But when we woke up this morning, look at our daily time frame, we had run the previous high via earnings, and we were up at the ultimate high, which means we were at premium, right? If we're at premium, we're looking for shorts, depending on the structure, right? And if we're at discount, we're looking for longs, depending on the structure. So that's kind of what led me to the idea that, hey, we are in the markup phase, but we need to see some level of pullback. So I'll bring out my pre-market plan and we'll go over that and see how accurate it actually was. All right. We go over to our gray box over here. What we were looking at is the current conditions. We were at the markup phase, but at the high. We were bullish as long as we could remain above the gap at 64.22. And you can see as soon as we broke 22, it was night season. So if you were interested in, getting short at the, a little bit lower, you didn't want to deal with all of that reversal trader entry, you could have just waited till we broke 22, and then it was night season from 22. I mean, I think we dropped almost 60, 70 points from the 22s, right? So as long as we remained above 22, we were going to remain bearish bullish. And as long as we remained below 68, we were bearish. You can see 68 never really got retested. Therefore, we headed down toward the 22s. We ran the low of yesterday and immediately found buyers, right down and hit this low, indicating a potential low of the week has been set. As long as buyers continue to defend the end dog, I want to remain bullish, targeting the ADR. The end dog was that 22 level. So if I'm going to remain bullish as long as they hold that, well, if they don't hold it, then I start to turn bearish. You can see below 22, it was night season. Now, how are we looking to play this in relationship to our ranges and how we create our system? It was easy. I'm gonna say easy. I'm saying the setup was easy, right? How we developed. The overnight range was 64.68.75 through 64.60.50. The low was 64.39 through 64.31. The PM range was 64.35.50 at the high through 64.22.75. The low was 63.79.75 through 63.66.75. Well, what are we looking to do with this information? Because otherwise, it's just a bunch of numbers. One, on the overnight side, we're looking to short at the highs, right? So I believe that during the day, we never really came back up to the 54s, or during the New York session, we never came back up to the 54s. But you can see we tried to make our way up here, and I'll go over what this level ended up being, right? But ultimately, from the overnight chessboard high, we were looking very, very bearish. So we were looking to short the highs and long the lows off this level. And you can see, even though the longs didn't last long, it was still an opportunity to get long off the 31s, which is the exact trade I took. I didn't take profit. I was in a demo account and I wanted to see if I could hold to my actual TP, which was just literally right here. It wasn't really that far, but the market was just too strong to the downside and I ended up losing out on the demo trade, right? The PM session range was important because once we got back out of the overnight range, now the thesis for the PM session range was short the high at 64.35 through roughly about, 64.35.50 through 64.22.75. So like I said, a break below 64.22.75, although it appears like you're buying the current low, which you are, but if your thesis is that we're going down to the low, then is that really the low? No, that's just the start, right? So it's not a bad trade buying the break of that candle right there, right? When we look at the extreme, we never got triggered in, so there's no reason to spend much time on the data high, right? And then we look at the lows down here. We ended up retesting these lows yet again because they were also chessboard lows, and you can see once again we got just a tad bit lower than yesterday's low. So ultimately, we're finding buyers at the lows, barely breaking back above the highs, and we're finding sellers at the highs. So again, I'd say that every single one of those trades that got triggered were good trades to take. You just have to be responsible for your own management once you get into those trades, right? So let's move on down to the 5-minute time frame. I want to show you in relationship to time and price exactly how price was delivered, right? So I want to turn on the macros here. I just literally turned them off, right? I'm going to show you one of the mistakes I made in my demo account too. So anytime I do demo, or anytime I chart in general, all of these little lines and fair value levels are literally transferred over to my Top Step account, right? I marked them, I basically chart twice. And the mistake that I made later when I came back and looked was that I mistaked 63.22. I don't know why. I had 63.22 as settlement. I think I might have just moved it on accident, but the actual settlement was 64.06. So where I thought I was longing off of settlement, I actually was longing like basically still at the high, right? It still ended up working and I could have taken profit. But when I went back and looked at it, I was like, holy crap, I had my chart marked off wrong, right? So again, just another little benefit to trading on demo. You start to catch little small errors that you can also clean up, right? Like, so when I went back and looked at it, I was like, oh, okay, well, when we bounced off here, I ended up taking another demo short 64.33.50 on the retest of the chessboard low, right? Break and retest off the overnight chessboard low. That's a go-to move inside of the system. I took the shorts all the way down to the weekly fib somewhere. Like I got out down here, it was like almost 100 points. Like it was really, really clean trade. So anyway, let's move over to the time frame, or let's move over to the time, right? That's what I wanted to do. All right, so we go to the 350 high, right? The first thing I look for is where are we in relationship to the range, right? If we go all the way back, right? I'm gonna take you on a little trip before I do anything in regards to time, right? We go all the way back, right? And we were to say, let's just take everything off. Like, let's not even worry about top-down analysis. We're just gonna focus on time and price, right? And market structure, all right? If we go all the way, I don't know why this thing is so laggy. All right, there we go. If we go all the way back to Sunday, the high of Sunday, and we just take a line, right? We just draw, this is the high, meaning anything above this, if it doesn't keep going, it's bearish, all right? And then we take the low from Monday, right? Which is here, and we make it a green line, right? Just forget about everything else. We're just gonna do simple support and simple resistance, right? This is how easy the market can potentially be if you understand how the market moves, right? So the rules of a range is you want to look to short above on the breakout, and you want to get long below on the breakout. That's usually generally the rules until we start to break lower, right? Anyway, if we do that and we go back to the 5-minute chart, we go back and bring out our macros, right? And what we're looking for inside of our macros is we want to see 350 to about 510 bring the high of day, because that means London is bringing high of day. That means we're really in tune with the algorithm, and we haven't been doing this in a while because we've been so bullish. But this right here is a signal that we're starting to get right back in tune with the sequence of price. We trade up into 350, perfect short off the high at 350. We come down, consolidate, trade up into the 550 slightly, but basically still in consolidation. We trade down on the other end, and then we rally back up, and this is where we start to change the character, because now we're putting in these lower highs coming down, right? So since that time frame, all we did was drop, break below the low, come back up, retest the inefficiency here, and guess what this red line is right here? This red line is Monday's high. And guess what time we got up here? Right around 8:50 in preparation for the dump of New York, right? We got up here at 64.57. All we did was retest Monday's high. Look how many times we tapped it, right? So then you go into 9:30, right? And we start to dump aggressively into 9:30. So one thing I'm looking for is when we see these aggressive dumps, if I'm not in the trade, then I'm looking potentially to go long, depending on where we go out of this. So we break down aggressively inside of 940, 945, and then we start to trade up into 950. And this is where I should have been more bearish. Well, I shouldn't say bearish. I should have been willing to take profit faster out of my entry, because I tell you, and I go through this a lot in the live session. So if you're not making it to the live session, I strongly suggest you do, but I'm gonna put it on video as my entry criteria, right? In addition to my chessboard, which you don't even see on the chart right now, right? I'm looking to see how the market plays off the 30-second orb, right? That is my entry criteria, one of them, right? Or that's one of my filters to assist with my entry criteria, right? So what I do is I just draw two lines, right? This will be illustrated by these little black lines right here, right? For, illustration purposes. I draw these two lines, and I already know that I'm bearish, right? So if we trade down away from these lines, then I'm looking for the reversal sequence. We get the reversal sequence. I buy here. We bleed past that level. I add to the position here because I'm anticipating a rally back up, right? Small size over here, add to the position here, and then boom, we pop back up. My problem was I didn't get out when we failed to get back above the orb. You see how we continue to fail? Not once. Once we dumped it. Okay, I can take one dump. We come back up here and we don't make a new high, it's time to leave, right? I gotta go, because at this point, I'm trading against the structure, against the London high, right? And it's probably consolidating to come out and take me out. And it just slowly walks down. And once it got below the orb again, I knew it was over, right? You see, once we got below the orb, we did the exact same structural test here. 3 taps, then we leave. We get below the orb, a key level, 3 taps, then we leave, right? Finally, we trade down into 1050, which leads me to believe that around around 11, we're going to get a nice little pump up. But as long as this pump doesn't break the structural high, that means we're going lower to break the structural low. We continue to trade down, and guess what this green line is? This is Monday's low, 64.0875. We trade below Monday's low into settlement, which was 64.06, right? Trade a little bit lower, right, into 64.02, and then we break the high, we come back up and make a higher low. That's ball game, right? Easy money straight back to the upside, right? We get all the way back up to the orb, right? Because now we have fair value levels, the orb and our chessboard, right? And then it's ball game. This is the 1230 trade that I took, right? 3 taps, right? Look for those three failures, right? The market moves in threes. 1, 2, 3, night, right? We never come back there, right? And you can see, I think I actually have the executions on this trade. You'll see exactly how I took the paper trade, right? So it's just a benefit because I paper traded today. So there you go. All right, so you can see right as we were tapping up here, I got long again, 23, and then, or what is it, 33, 25, and then 34.75. It was 10 mini contracts. Does it matter? No, it's not about money and price. It was just the shit was set at 10, so I just took it, right? And then what was my TP? My first TP is coming into these lows over here, right? I want to catch that liquidity on the 5 minute, right? I'll go over here so you guys can kind of see where I'm looking at here. Again, forgive this thing for being so slow. It's not me, it's them. All right, here we go. We drop down, and the first target I'm looking for is I want this low right here. But I said, all right, I want the low, so I'm going to target 64.20. I'm going to take profit at 64.20. 64.20 gave me profit. My next target was 64.0275, which was the next liquidity sweep, right? And then my last target was going to be based off the low that was coming in down at the lows, right? I shouldn't say the low that was coming in. I should say the demand zone, right? The ultimate low. It was going to be my last target, but since I was up so many points, I was like, well, let me just drag it down. I took 3 off, and then I got stopped out of the last runner, right? And now you see this big wick is an indication that buyers are very much interested. And now we have this high that's being taken, and this is real live price action. We're trading down into 315, 345. I would be anticipating a rally back up to the upside as long as 63.65 stays intact. We'll see what happens, but that's how I would trade that, right? So now let's move over to one of our more popular instruments as of late. Shout out to Timmy. She got everybody excited about this RTY thing. But again, didn't make a pre-market plan for it. However, we definitely had the levels, and I have them all highlighted like this for the simple fact that I wanted her to have the levels because she's the one trading it, right? So we had our overnight chessboard high, right, which was these highs here. We had our overnight chessboard low, these lows, and all the market literally did, if you turn on time, right, and turn on the macros, right, we go down to the 1 minute time frame. We go back to 9:30, right? The market trades up. Thanks. Hold on. There we go. Jesus. All right, we trade down into 9:30, and we talked about this being the entry, right? We come up, break the high. We come down and sweep the low. Again, you could either add to this position, take profit, put on another position after being stopped out. It is what you want to do. But to me, I talked about this 8:30 candle here, and I said, hey, the deeper we come into this 8:30 candle, you want to try to get long here and then use this 8:30 candle as your invalidation point. You don't really want to be in the trade once we start taking that out, right? So then we go up, we rally up from 940, 942, trade up into 950, and Pippi took the shorts up here at these highs. One, he had an order block here, right? He had the confirmation from us trading up into time, right? He was stacking confluences here, right? Once he got short, his target was right back down to the bottom of the range, right? Didn't mean that you're wrong for taking longs, but you're probably wrong for holding them if you're holding them all the way back to down here, right? Then we get the consolidation between 1025 and 1045. We trade down into 1050 and we break the structure. This is the change in the state of delivery. Now we look for a new range to be set. So we need to break through that structure, consolidate, break one more time because the market moves in threes. And then boom, we rally up into 1150 where we get the consolidation. The consolidation brings us back up, which is a sign that we're probably about to go down because we consolidate. Before consolidating, we trade up or manipulate up back into structure where this high is still in control. So as the market trades back down into our overnight chessboard high, we come back down and finally we take out that 830 low. This is a very, very bearish signal, right? Excuse me. This is a very bearish signal. I swear I'm hitting cancel and it's just ignoring me. All right. This is a very bearish signal as we trade back into the overnight chessboard low, right? And then dip down lower. Now we're starting to use the low as a resistance. Support has now flipped to resistance, and now the market's trying to trade lower. See how we're coming into the 315 area? The target's probably going to be to try to break through this last low at 2198 and try to change the character on a higher time frame. But ultimately on RTY, everything followed the ranges that was set in place prior to us trading. If we go over to the NASDAQ, you get very much similar activity as the S&P 500, except it was much cleaner, to be honest, right? 830 right into the overnight chessboard high, coming from 350 London highs, right? We tapped right into the true day, and then we just melted. Like it was just a melt session. We came back up, retested the overnight chessboard low, melted again down to the daily fib, which is fair value. So we find buyers there. We push back up, closing this inefficiency, but not quite to the overnight chessboard. I mean, to the chessboard high. And then we trade down. This time there's no liquidity there. So we easily slide through the daily fib down to the next inefficiency, which is the close of this fair value gap at 426. Once we close this fair value gap at 426 and we sweep these lows, now we're still bearish until we break back above 496. The market tries to trade back above 496 and unable to do so. So as we're trading in the 315, if we can get the pump out of here, it should be looking to take out this level. Otherwise, it's going to drop, and it's going to drop like a rock. And it's okay to be incorrect because you're buying at a good level if you're getting in long here. You're getting in long, so your risk is very small. So you just let the trade be, and you allow the trade to be invalidated versus getting in 3,700 times on that particular trade. All right, last but not least, we move over to the Dow Jones, and this thing was moving beautifully again in relationship to the system of the chessboard, right? We got a push down from 350 again, and then right into 9:30 or 10 o'clock, which is what I really wanted to see out of the other instruments. We got that aggressive push into 10 o'clock, right into that key level that we keep screaming about from the top of the rooftops. I keep saying, hey, if you're trading the Dow Jones, 44,777 is your key. If you get above it, you want to stay long. If you get below it, you want to stay short. And lo and behold, we got below it over here, right? And we came back up and retested that on the dot, right? The high of this candle is 44,781. So we came up about 4 points above it. And then from there was just a dump session. We got through the daily fib, which means we need to come back and retest fair value. We come back below the lows, we get below the chessboard low, and now we're targeting monthly settlement of fair value level. Trade below it. Now we got to go back up and retest. We don't find enough buyers to break the highs. Now we got to go to the next inefficiency and or liquidity, and it will be the in-wall from June 29th and this 4-hour or daily demand zone down below. So those are my thoughts on my market review. I hope this is helpful for you guys. If you guys want any additional help or assistance, feel free to reach out to myself and some of the other members in the Discord that are more than willing to help you guys. That being said, this is the market review. My name is T Hobbs, and I'll catch you guys on the next one, man. Peace.